Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Tomorrow is a big morning, but it's very rare that you see two central banks meeting, and they may not be the biggest headline. CPI coming out, US CPI at 7:30 a.m. Central Time. The core read is what we watch most closely. It's expected to come in at 2.4% year over year and a gain of 0.2 month over month. But this comes on the heels of non-farm payroll wage growth beating expectations, coming in at a gain of 0.4. This was the strongest read dating back to December. Ultimately, you have strong wage growth, strong CPI, then that pushes the Fed up in their timing. They're already expected to hike in 2 weeks, but that December hike is at about 79-80%. That's going to speed that up, and then it's also going to beg the question, are they going to hike before March of next year if inflation starts to heat up? So do we think this number comes in strong? No. PPI today missed expectations across the board. The dollar started weakening on that, but we'll get to the bigger reason why the dollar weakened today. But PPI missed, and we think CPI is going to follow suit here. We don't think the inflation is really here right now, or really going to show up in a strong sense of the word. Now, first, let's focus on the Bank of England. Their policy meeting ends at 6 a.m. Central Time. They're not expected to hike rates. They did hike rates last meeting, but ultimately their tone on trade, the Brexit, and their growth due to trade is going to be important. Remember, the pound is a chunk of the dollar index, a small one, but the euro is the biggest chunk of the dollar index, 57%. And right now, the ECB meets tomorrow at 6:45 a.m. Central Time. They're not going to hike rates either. They're not expected to hike rates until the later half of next year. But they are expected to start winding down quantitative easing beginning next month. What's their tone here? We don't think they're really going to speed up their timeline, and that's, again, why CPI from the U.S. is going to be the bigger read tomorrow. But, again, you have to hear what they have on trade, the EU, the US, the trade talks there, the expectations of growth in Europe. You've seen stronger growth in more recent numbers. You've also seen stronger sentiment data than expected recently, too. It's turned a corner from the worst levels since 2012 in sentiment. And sentiment's very important for the ECB to keep an eye on, especially German sentiment. So watch what they have to say about that. But getting to the technicals, the euro is coming off of key support from later part of last week, 115.5. It's tested it a couple times this week, and this is moving out and it's testing the 50-day moving average. We have resistance, though, at about 116.30. The 50-day sits right above there, and we're closing right there today. You want to watch this level into tomorrow. We also have resistance about 116.70. So there is a layer here. 116.70 really is less important. What is more important is where we finish today, that 50-day moving average, and then ultimately the momentum. If we can get that momentum out into about 117. The real level to watch is 117.30, 117.50. That aligns with the previous swing highs and our major three-star resistance. You have the sell-off in the euro that got down to about 113.5. It's come out, it's built a nice cup, and it rallied up to above 117. Now this retreat down, I like seeing a pattern where you get a pullback from that high and you get constructive patterns that are a constructive pullback that builds off of support and then builds for a retest. That is what we're seeing. That is how you can get momentum, because you're going to get a lot of buyers that can really start jumping in to catch that momentum, but you also have shorts that did sell above 117 before, and those shorts are going to be forced to cover. So that's how you can get a really strong move, and that exactly is what a cup and handle pattern is and can be, especially on the lower end of a range that we've seen over the last year. So watch for that in the euro. That's going to be really important going into tomorrow, and again, where we finish today and relative to where that price action is tomorrow, can it continue that momentum? Moving on to the yen. You have the yen right around 90, and we talked about yesterday's weakness. There's just been really unenthusiastic rallies in the yen, and we've seen this market come up a little bit today as the dollar weakened, but ultimately below 90. And as long as it's below 90, the bears really have an edge here. We see no trade. We're ultimately neutral in the yen, especially going into the CPI number tomorrow. But watch for that. I mean, rallies in the yen have proven to make winning trades when you sell them. So just keep an eye on those rallies, and if they stay constructive or stay below resistance is what I mean to say, then you can look to be selling the yen. But below 90, the bears are in the driver's seat on the yen. Moving on to commodity currencies, the Aussie dollar, it's finally coming out of the gutter, if you can consider that. We have long-term major 4-star support, 71.25, 71.50. This is a level multi-years going back. We took it out this week, but the market has come back a bit, and tonight you have employment data out of Australia, so it's going to be pretty key. We're getting closer to 72 here on the close, but even if this market can get going, whether it's because of a weaker dollar, whether it's because of a better employment report out of Australia tonight, 73 to 73 and a half roughly is going to be a huge wall to get out above. So you can look to really sell any rallies against the first test. But what you have to be in mind about is good news on trade. If there ever is any good news on China and U.S. trade, that Aussie dollar is going to rip higher. So you got to be careful with that. Really, there is long-term value, we think, down here as you get down to 71 area. But right now, it's not the time to take advantage of that. There's too much uncertainty, and especially ahead of an employment report out of Australia. Lastly, though, the Canadian dollar. We talked about this on the FX Rundown yesterday. We like the Canadian. In fact, we've been talking about this for weeks and even months now, that the Canadian dollar is in well position to have a rip-your-face-off rally. It's really one of the better currencies out there against the dollar, but you need to get trade figured out before that. And you're starting to see that now. Just late yesterday, right before the bell, in a very thinly traded market, you saw the Canadian dollar rip higher and right into that range here of our resistance. Check it on the FX Rundown. Now, you want to see that pivot that we have on the FX Rundown. You want to see the market maintain price action above here, and it is a long play if you can see that stay in that momentum above there. But again, you have to continue to see positive momentum here on trade, and we like the Canadian dollar. We detailed in the FX Rundown yesterday. Check it out in the report. Give us a call if you have any questions, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.